Hey, Eric, how are you doing?
Hey Beth, how are you? So good to see you.
So good to see you. December year end. Has this been the craziest year ever?
It's definitely been a very interesting year. I will say that I like 21 better than 20. Um, and because of what's happened in 21, it makes me feel very optimistic about 22. So it's been
Absolutely.
it's been a whirlwind year. So I feel good
Yeah,
about where retail is today.
so let me welcome you to Market Update Monday, LinkedIn Live, Facebook Live, and maybe some other places live. I'm not sure. To my audience, please welcome Eric Williams, Senior Director, right? Senior Director of JLL Capital Markets.
That's
And
correct.
tonight we have four guests all talking about my favorite place in the world, except for Hawaii, maybe South Florida. So, Eric, what tidbits do you have for the audience regarding capital markets in South Florida?
Sure. Just sort of taking a step back from a macro lens, the amount of liquidity that's flown into the commercial real estate sector is at an all-time high. And that's really across the board. I mean, that's global capital, that's institutional capital, that's private capital. Everybody wants to be a part of and invest in commercial real estate. And that's really across property types. In a lot of ways, real estate is serving as a surrogate for income assets, which haven't really provided a meaningful return over a long period of time, given the low interest rate environment that we've been in. So people have been sort of shifting what they would traditionally allocate towards those assets into commercial real estate. So we're seeing a record amount of money flowing into the space. I would tell you that there's no doubt that industrial and multifamily have been the most popular property types among the major food groups, but we're starting to see that enthusiasm shift back into retail for a variety of reasons. Um, and I see you cheering because you and I both sort of live and breathe retail on a day-to-day basis. So we weren't sure we were going to be able to say that again when March 2020 hit. But in a lot of ways, I don't want to say the pandemic has been a positive because there were a lot of businesses unfortunately didn't make it. But the pandemic has definitely proven the resiliency of the retail sector. Just look at where the thoughts were in March 2020, and we start to see things pick up pretty meaningfully in June and July of 2020, and into the latter part of 2020 and in the beginning part of 21, things really just took off. And look, we're fortunate to be in the state of Florida, where our businesses had an opportunity to sort of stay open a little longer than some other parts of the country and be able to reestablish their footing and get their business back. So I think the performance of our market today is indicative of our ability to sort of see it through and weather the storm early on in the process. And if you look at
We,
where
we're so
retail earnings,
fortunate. We're so
go ahead.
fortunate to be in Florida, right? I mean, gosh,
Oh yeah,
go
for a
ahead.
variety of reasons. Personally, weather-wise, tax-wise, and definitely from a business climate standpoint.
Yeah, I owned, as you know, six shopping centers. I only lost one tenant from COVID.
And by the way, that's not a shock because if you talk to people across our market, whether you own unanchored strips or you own grocery anchored centers or you own larger format centers, the case has really been the same. I mean, there was a few losses and casualties because of the pandemic. Those were probably tenants that probably weren't on strong funding to begin with. But what the pandemic has done is sort of ushered in a new wave of tenants that see this as an opportunity. And because of that, there's really a supply demand imbalance between tenants and the amount of space available. So, I mean, if you look across the board and you go tenant by tenant, retailer by retailer, I mean, the earnings reports have been off the charts about the performance, and in most cases, is better than 2019. So I think retailers feel good about where they're going. I think landlords feel good about the retail that they own. And I think people that don't own retail today are very much interested in owning retail on a go forward basis for those reasons.
Well,
So,
good. So that bring those cap rates down, right?
yeah. So, I mean, you mentioned cap rates. What we're seeing is because what I mentioned earlier, because industrial and multifamily have been so popular among the investors, uh, the bidding has gotten very competitive, and the pricing has gotten very aggressive. And we're starting to see people get priced out of multifamily and industrial, and we're starting to see those investors come over to the retail sector. So if you're selling multifamily and industrial at a 3 and a 4 cap, it's hard to go and buy new industrial and multifamily at a 4 cap. So if you go buy retail and call it anywhere between a 5 and a 7.5 cap, and you feel good about the real estate and the tenancy, I mean, that's a solid risk adjusted return. You're talking about 200 to 250 basis points. So we're really starting to see that manifest in our listings, where we're seeing new capital sources show up every day. A lot of capital from New York, as always has been the case in South Florida, but we're seeing even more of that. A lot of investors from the West Coast, where historically we haven't seen a lot of it, some of it, but now we're seeing a lot of investors from the West Coast come into South Florida and want to invest. And look,
And they think our prices are low, right?
Oh yeah, 100%. You know, historically, California, from a retail standpoint, has been one of the most aggressively priced markets in the country. So they can come to South Florida and get similar quality product at comparable or cheaper prices. That they feel really good about that. And you know, look, South Florida has a lot of runway. It's not all about sun and low taxes. The numbers actually speak for themselves. I mean, the real estate fundamentals, particularly in retail, have been strong in South Florida for many years. So that's a proven track record.
Yeah, I mean, my sales of my centers are up, like you said, over and above 2019. The disposable income from the population burst of the influx of people are helping our sales through the roof. The restaurant sales, crazy, right? So all of that bodes well for, for investment sales. What's the, do you have a deal you want to talk about that you guys sold, or that was in the news that you think is kind of crazy and representative of what's going on in South Florida?
You know, I wouldn't say that I have a particular deal. I mean, we've been fortunate enough to do a fair amount of deals this year. I think we end up doing close to $1 billion in transactions this year. And the interesting thing about that is that no transaction was with the same buyer. So, you know, there's lots of different types of groups showing up to bid on retail, private, institutional, public companies across the board. And that's made it very interesting, just seeing where the capital is coming from. And on every deal that we've worked on this year, we've seen new to market capital sources show up. We just closed on a deal in Palm Beach, Northern Palm Beach, to a group that was selling off their assets in the Northeast and trying to reestablish their portfolio in South Florida. And that's a story that we hear very consistently. And I don't expect that to stop anytime soon.
So when you say, okay, you've sold $1 billion of real estate, is that 10 deals, 30 deals, 100 deals?
About 20 deals, give or take, I think.
So 20 deals and all different buyers. That's the velocity of that is crazy. If you looked back in 2006, we were really, we were hot in 2016, but you were seeing similar buyers, right?
Correct.
Wow. That says a lot.
No, and again, it's just been interesting. We had someone who sold a mobile home park in Chicago, want to buy a retail center in Florida. So there's been dairy farmers buying retail assets in Florida. So look, I think South Florida is a place that people want to not only live, but people want to invest. The vacancy rate in South Florida today is about 4%. So, I mean, the market's really tight. I'm sure you can attest in your shopping center portfolio. There's no space.
I don't know if you know this, but for 36 years, I've been in the retail industry, and I have had one line for 34 of the 36 years, which is I think that 100% leased shopping centers just says one thing. And that one thing is the rent is too low. And Eric, for the first time in my entire career, right now, 2 of my own personal properties that I own are 100% leased. I don't want them to be 100% leased, but they are. And of course, course, people are like laughing at me going, obviously your rents are too low. But, and it's true with one of them. There's like two tenants that I'm going to be rolling pretty soon and getting higher rents. But I think properties that are 100% leased the rents are too low.
I agree with you 100%. And
it is high occupancy across the portfolio for me. I know Larry's going to come on and talk about that industrial office. It's going to be interesting to talk to Ken. Oh yeah, Josie just wrote, you have 3 properties that are 100% leased. I forgot about that other one. Ken, I don't know about, I think that is not going to be the case in office, which is going to be very interesting to talk to Ken Morris about. But yeah, the occupancy is probably, how long have you been in the retail capital markets?
Since 2005.
Highest ever, right? Highest occupancy ever that you've seen?
Yeah, look, I think we're at peak occupancy. And, you know, I think if there was more space created, it would get leased, to be honest with you. So, I mean, look, the misconception among investors is when they see 98, 99, 100% occupancy, that means it's stabilized and there's no opportunity. But I think to your point, when it's leased, you know, that means that rents are too low, right? So if you sort of look on a go-forward basis, right, you know, we're at 96, 97% occupancy across the market. There's only 1% of total inventory currently under construction. So there's not a lot of new supply coming on the market. So that means occupancies will continue to remain high. And as, you know, landlords like yourself get the opportunity to get back spaces, those rents are likely going up pretty meaningfully. And, you know, I sort of see that continuing over at least the next 2 to 3 years at a minimum.
All right. So any last words, Eric, for our audience about capital markets, JLL, South Florida? Anything else you want to throw out before we say goodnight to you and we move on to Ken?
First and foremost, I'm happy to say that retail is back. South Florida is one of the hottest markets in the country, and I'm fortunate to be a participant in this marketplace. And I look forward to being able to work on many more retail transactions with anybody who's listening or owns a shopping center in the near future.
Eric, thank you so much for being here tonight. Please stick around and listen to the other panelists. And thank you again for being here and preparing some great stats for us.
Sure. Thank you for including me, Beth. It's an honor and a pleasure to be a part of the Monday Market Update.
All right, Eric. Good night.
Bye.
Let me see if I can figure out. Yep, here we go. Mr. Morris.
Good evening. How are you?
Good evening. How are you? Ken Morris, president of Morris Southeast Commercial Real Estate. That's a whole mouthful. Did I get it?
That's right.
Morris Southeast Group.
Okay. It's close
enough.
We've
been friends. How many years have we been friends? Decades.
Decades. Yeah. Yep. It's embarrassing to admit that I've been around for over 3 decades doing the same thing. I think I love it. And it's been a pleasure to know you and to learn from your experience. And you've been a trailblazer for those many decades. So I am honored and humbled to be here today.
We're happy to have you. You were very helpful to me when I bought my 2-story 1970s office building a few years ago, when I was thinking about putting it under contract, and I asked you to come to lunch so I could pick your brain about the Plantation submarket, office submarket. And then during lunch, you're like, just get to the point. What's the deal? I'm like, well, I want to buy this office building. And all these people thought I was going into the office market. I'm like, no, I'm going to knock the building down and do something else.
I actually gave your lenders some market comps and metrics to get them to give you a loan. I remember that building, and we will not discuss it, but it did have a peculiar scent to it. And that scent started sometime, in the mid to late 80s, and it just got stronger as time went on, into the aughts, and by the time you purchased it and demoed it. So I think that there should be a statue of you erected somewhere near City Hall and Plantation for taking that building down and building what you've done so far. It's such a lovely center. and a great architect, and I think it's really made a big difference for that corridor on Pine Island Road, and it's made a big difference. So I look forward to phase two. That's going to be great.
Yep, we're working on that. But when I was deciding to buy the building and I knew I was going to be evicting or not renewing a lot of office tenants, back then that submarket was a very tight submarket. Those tenants were having a hard time finding new office space. So, the drum roll, please. Retail's hot. Larry's going to come on and talk about industrial being hot. Traci's going to come on and talk about how construction prices are through the roof. So are you going to be the Debbie Downer? Like, what is going on? Are we going to? So I've heard a bunch of things. I've heard we're never going back to the office like we were before. I've also heard that floor plates will get larger because, people will want more space for comfort. So what is the answer?
The answer is we don't know yet. Everybody who's saying that we're never going back to the office is right, and everybody is saying that everybody's going to come back to the office because we're social creatures and that we have to convene, and we're missing out on sharing information and coming up with those new ideas, like Apple and having all the engineers and the thought leaders together mixing at the coffee maker or water cooler or whatever you want to call it. Look, I think that the fact of life is post-pandemic, the world really has changed, and we were all forced into an experiment to work remotely, and it turns out most of us in big cities and suburbia have the bandwidth available now to work remotely and communicate. That doesn't mean we all want to do that, and that doesn't mean everybody is happy working from home. Many people don't have happy work environments, or they live in very small spaces and they really can't effectively get their job done, or they just like getting out of their house and being part of a team and so forth. So I think the pendulum will continue to swing back and forth. And my great prediction, and I'm just one voice and I'm a boutique operator at that, my prediction is, I think because technology will allow us all to work remotely, many of us will. And I think the average occupier is probably going to reduce their footprint by 20 to 30% because they can. That doesn't mean the office is going to go away. What it means is that the utilization of the office is going to change a bit. It's not going to be little cubicles, and it's not going to be everybody in individual offices. It's going to be sort of a great convening environment where there'll be lots of meeting spaces, formal and informal. It's going to be more like a hotel where you're going to be able to get, any type of coffee you want, a massage, workout. They're going to create, and it's happening now, creating this environment in the office where everybody wants to come back in. They're going to fight to get back into the office, and that's partly to fight for talent as well, right? Especially the millennials and those that are following. Back when I started, long time in the midst of time, we went to dark, dreary, humming fluorescent light tubes, and we loved it, or we said we loved it. We worked crazy hours, but we didn't really love it, but we worked crazy hours. Today's younger worker really doesn't want to do that. They want natural light. They want to have the greatest coffee experience of their life. They want to be able to get a massage. They want to work out. They want to be in a stand-up desk. I'm standing up right now. This is the future. I think the remote work and working from home behavior is very sticky. And for some people who have those type of jobs or careers, they will take advantage of it. I had a very interesting meeting with an occupier in Broward, a very large software company in the healthcare space, top of the field, state of the art. They have many other internet businesses. Their engineers are now distributed worldwide, They have no plans to ever bring them back. Very interesting. Very interesting. I'm not saying they're saying we're not saying that the office is going away, but who we're going to place in the office is quite a different situation. I read a lot of interesting, and I'm gonna talk briefly about the market, each county, and what's going on in the market. But I'm just so excited to research what's going on in virtual space, spatial computing. I mean, people are spending millions of dollars for virtual estates and virtual properties in the metaverse that doesn't really exist yet. Okay, it doesn't exist. And what's happening is that you and I, let's say your retail center or your retail centers on University Drive, they're going to be digitized in the next 3 to 5 years. And there will be a digital footprint of those in the metaverse. And customers will be able to go to your retailer tenants digitally. And that's a whole nother world that's going to be in parallel in the real life IRL with, in the digital space. What it all means, hard to say. I don't know, but that is coming. And virtual meeting spaces, these are here. They're happening now. Companies like Spatial, you can be in a virtual conference room and you're looking at avatars, but that technology is getting better every day. Apple's coming out with a new set of glasses that'll kind of look like, this, and you'll have AR and VR capabilities with it. So all of that technology will affect the utilization of physical office space. I'm not saying by any stretch it's going to go away. As Eric said, and not putting words in his mouth, these are my words, I think that there's a fire hose of capital coming into South Florida, and that's going to continue. And because of that, you're seeing cap rate compression all the way across the board, even for office. And office is the one asset class that is still struggling and will struggle. And it is very bifurcated between the haves and the have-nots. Those office product that have the amenities, have the location, have the right power, the right connectivity, they're going to be just fine. The ones that are not where people want to work or are on the periphery, they're going to be either demoed, turned into residential, they're going to whatever, or retail. But here in South Florida, remember, we're only 100 years old for the most part. You go too far west, your feet get wet. You go too far east, you're in the ocean, your feet get wet. So most of the new development here is going to be vertical, as opposed to what it was for the first 100 years, which is, spread out in urban sprawl. So we have so much of population growth that's going on. The state of Florida had 380,000 people move into it last year alone. Now, not
how many is it normally?
It's about 1,000 a day. So about 360, 365. And they expect it right now. I think FSU and or Florida said that, yeah, my son is a student there now. So we will talk about the Florida State real estate program. Separate, folks. I know you don't want to hear about Florida State, but the population growth itself is putting a tremendous amount of pressure on all asset classes. Eric is seeing it in his practice and what's being sold. You're seeing it from your tenants. There's just no real estate to be able to, there's not enough to be able to serve the population. And that goes along with office. So the fact that there's not going to be a tremendous amount of new development for office is going to help the office market not only do well, but thrive as an asset class. Our cap rates may be a little higher, but that's okay. They should be, because the risk level is a little higher. And what most people don't understand, owning office assets is a very capital intensive business. It's not like the retail world where you say, you like this box? Great. Do whatever you want to it, but you're going to pay rent starting on the 1st of September. In the office market, people come over the threshold and they say, I like it, but I want all of these things changed, and that costs $80 a foot or $100 a foot. Those days of landlords spending money on renovating offices are starting to go, the numbers don't pencil out anymore. So you're going to see a shift in that market as well.
Any deals
Quickly,
you know about that have happened recently that are, eye-popping or
well,
interesting for the
uh,
audience?
yeah, it's a good question. Chewy's deal in Plantation at the old Motorola complex, 221,000 square feet. That's noteworthy because of its size, and also Chewy left Dakota, which was a great location for them, but it just didn't have enough space. What's interesting about what's happening now, we have not only tech firms, but we're becoming the Wall Street of the South. Apollo Management, Blackstone. Apollo took 24,000 on Brickell. Blackstone took 41,000 on Brickell. Starwood, the developer asset owner, is building their own headquarters on Miami Beach, 144,000 square feet. That's one of several office projects being developed in Miami Beach right now. That's amazing.
How about
how
the
expensive
mayor?
that real estate.
How about the mayor, the city mayor of Miami?
Fantastic.
He should win he should win Office Broker of the Year award.
He should
The
also
mayor.
win, he should definitely, like the Beacon Council should definitely, put him on a chair and, toss him up in the air several times. Exactly. Miami.
All right. You got a couple more points, and then we're going to go to Traci so she can tell us that construction costs are going to come down soon.
Okay, Miami, 10.6% vacancy. Certain submarkets are struggling. Airport West, that's about 18, 19%. Downtown's about 17. Fort Lauderdale, downtown's about 19, 20% vacancy. The new Styles building, the main, has really taken a lot of oxygen out of the downtown market. There's been a flight to quality. They're almost leased up, which is terrific for the rest of the market. Palm Beach County, amazingly, is doing much better than its neighbors. The vacancy rate is actually 9%. There's been positive absorption in almost all of the submarkets in Palm Beach County. In Miami-Dade, 70% of the markets have had positive absorption, as opposed to 2/3 in Broward County. Broward County has seen definitely some negative absorption through the pandemic. There's a lot of Class A and C space available. Those markets have definitely been impacted. The Class A space is looking for warm bodies. It will happen as more companies come into the market. They just have to be patient. The lack of new construction is definitely making a big difference. And as far as workplace design, go ahead.
1 second. If you're saying that the occupancy or the vacancies are 18 to 20%, you threw those numbers out. In 2018 and 19, what were they? Do you know?
They were much lower. Like in Broward, they were probably in the Fort Lauderdale was down to like 9, 10. Sawgrass was around 12-ish, 13. And now it's at 19. And don't forget, there's a lot of shadow space, like that software company that I met with a couple of weeks ago. They're on the hook. They're paying their rent. And I have occupiers that I put in 19 and a gorgeous office space, also in the technological arena. And they're like, what do we do? Do we put our space in the market? Do we not put our space in the market? And I said, I know it's painful cutting those checks, but it's too early in the game to make any decisions. Most of your people want to come back at least 2 to 3 days a week. You need to have a place for them to go.
Right.
And
Right.
the ones that are in newer, nicer buildings generally are going to be okay. Issues like state-of-the-art cooling systems with UV lighting systems. We recently took on Airport Executive Towers in Miami by Miami International Airport. I just replaced the cooling system for Tower 1, state-of-the-art with UV lighting. I mean, all of these type of things are really important to the tenants moving forward. Is this going to be a building that we feel safe? And again, there's a lot of people still uncomfortable with going back to the office, but here in South Florida, we're at least 50% census in our buildings, as opposed to, let's say, a Manhattan or Atlanta, where it's more like maybe 20-25% that are in the office, and the employers are tugging at them.
Yeah. All right.
So
We're going to have to wrap it because I've got two more, but I do want to say that thank you. I gave you a lead a few months ago. So
yes,
someone
thank
that
you.
wanted to sell a building. I don't do that. And I knew you were the guy, and the clients are so happy. You got such a great price. So thank you so much for taking care. I love when I have referrals and I don't have to think about it. Like, call someone, take care of this, and it's not even another thought. So thank you so much for living up to what I told them you would be all about and my expectations of you.
Well, thank you for thinking of me in the first place, and thank you for having me on this evening's program. It's always a pleasure to speak with you. Thank you.
Love you. Thanks so much, Ken. And we'll keep us posted about the office market because
You
that's
bet.
it's ever changing, right?
By the day.
Thanks, Ken. Have a
See you
nice
soon.
evening. My dear friend Tracy Miller. Oh,
Sorry about that. I was listening to everybody else.
I see your
How are you?
Christmas tree. I have my Christmas tree. We're all holiday decked out here.
Yeah, well, I am in North Carolina with my youngest daughter, who just had a baby this week. So I'm playing grandma and baby whisperer. So this tree is about 24 inches tall. I'm in an Airbnb, and we're doing Christmas Wednesday night with all three of my kids. They're coming in from the other side of North Carolina and Chicago. So this will be
That's
an
so
early Christmas.
nice.
Yeah.
Well, welcome to Market Update Monday. I've been doing this for a few months and I've had people from all around the country usually. And I
Mhm.
realized I should do something on South Florida because we're
Sure.
like where all the eyes are, right? And I said, okay, what should I do? What asset classes? I knew I wanted Larry with industrial,
Mhm.
Eric with capital markets, Ken with office. And I'm like, and I'm retail, but I always talk. So I'm like, oh my gosh, I have to have Tracy from Miller Construction because everyone's talking about construction, right? So
Yeah.
we're going to start with I heard this rumor and I can't believe it's true. So I want you to either unfortunately say it's true or say, nope, that's not true. Okay.
Okay.
So my friend in Texas is a developer for like an oil lube company. And she
Okay.
does she's doing 20 of them. You know her, Brenna. And she said
Uh-huh.
that overhead double doors
Mhm.
went from, they used to be 19,000, then they went to 78,000, and then they went to 189,000, which, what is the real deal there?
Yeah, they're definitely over 100,000, and it's crazy. It's about the materials that go into them, right? I mean, construction costs have, we all know, skyrocketed in 2021, 20-30%.
Oh
But the
my,
demand for construction in pretty much all those markets, obviously not the office, but industrial is crazy, and Larry will tell you about that. Retail, automotive, we're building, we can't build these beautiful luxury automotive showrooms quickly enough. So demand for all those products has not slowed down. People are willing to pay for it.
I hear the baby.
You could hear that because they're in like a closed door.
No, 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 it's okay. This is a good thing about COVID is dogs,
Right.
babies, it's all fine.
It's true.
But so the bad thing with construction prices going up is when you're a
Mhm.
developer, like I'm in a mid deal right now, and mid deal, lease is signed,
Mhm.
prices are up. Luckily, my prices didn't go up so high, so my deal still works and still pencils. And I see, I'm always the glass half full girl. So I say, okay, the higher the prices, the least amount of construction and development, which then helps rents and occupancy. So I'm going to look at it that way, but I'm
Right.
not going to be going and developing a lot more until, do you see, is it going to settle out? I mean, lumber, right? Lumber was through the roof, but then it went back down, right? I don't know why that happened,
Lumber,
but
yeah, lumber definitely went back down. So most of the construction that we do in the commercial we're not using a lot of lumber. If you're up in Orlando and you're Central Florida, a lot of their multifamily uses a lot more lumber. They've got different building codes than we do. So yes, the prices went up 200 and 300%, and that has come down and leveled out. Steel went way up astronomically. That's starting to level out. Has it gone down yet? No. But other areas now we're really, having some supply chain issues. Steel, we're still having some problems, but sheet metal right now, sheet metal is up over 100%, and that's used for the ductwork. It's, used in so many ways. So other things can't get manufactured if the sheet metal isn't available or it's so costly. So all of that's trickling down. Um, I think next year we're going to see prices in ready mix concrete go up. Um, I don't think it's going to double. That's not what we're hearing, but it's going to go up and it's going to make a difference in, a lot of the industrial work that's going on. I mean, those are just big, enormous concrete buildings, all those tilt panels and everything. But, it's a lot of reasons. The manufacturing, one of the things that's going on, roofing is another issue, getting supplies for that. Roofing, the TPO, that's more chemical based and not even COVID related. We had a hurricane in Louisiana. We had a freeze in Texas. Their manufacturing got, messed up and nothing's caught up yet. So, there's just several different factors that are affecting those things. But
And labor.
labor, we're doing okay there. They're definitely for the type of project manager, superintendents, that high level person. We're interviewing a lot of people, or even considering a lot before we'll make an offer. And we do need more people. We like to have them on board for a while before we put them on a job site. But I know some of our subcontractors, so it's really important that communication with them to know what their workforce is. They can't be spread too thin, and they know that. I mean, these are relationships we've built over the last 48 years. So if you have a stable of enough in all the different trades, then you have an idea of how much work everybody's got, and that they can man your project when you're ready for them. So
So you have a new office in Orlando, right?
correct. We've opened, that's our Central Florida office, and they're overseeing. When I talk about the demand, we have more in the pipeline. We have more contracts in that Central Florida area than Miller Construction had in its best first 45 years. I mean, we just opened that office, 7 months ago.
Wow.
Yeah. So
Why?
it's
So is
incredible.
that just because, do you think that's just because Orlando can expand towards the beach and towards Tampa and there's more land, so there's more construction, therefore more projects?
That's what's happening right now. So they're having an industrial boom as well. But they're more central. They don't have all the ports that we have down here, but they definitely have more land. The cost of their land has not accelerated. I mean, Larry will fill you in on this, but one of the biggest deals lately, industrial land is going for $2.5 million an acre. I mean, that's unbelievable. That's unbelievable. So yeah, there's demand for everything. Now, most of what we're doing up there, we really went up there with City Furniture to build one of their showrooms. And a few of our team members moved up there. So we took that as an opportunity to go ahead with the expansion. That was kind of our idea for a few years. So we've got work in Tampa and Ocala and Bradenton. So it's been a very successful expansion.
That City Furniture in Dania,
Hmm.
spectacular. I I literally was driving down 95 the other day and went, where'd that come from? Like, I mean, it's
Yeah,
beautiful.
it is. And that was an old Kmart or BJ's
Kmart.
over there. And they just had their ribbon cutting last Friday. So yeah, they're a great client. They're a great company. I mean, I'm sure you and Andrew probably watch each other on LinkedIn. Andrew Koenig is epic on LinkedIn. Both of you are, people that are just so willing to share what you've learned to help other people exceed. It's awesome.
All right. So what's one last point that you want to get out there to our audience? We're getting rave reviews in the chats here, like, oh, great insight. Thank you. So what any I mean is so when I hear that lumber comes down, that gives me hope, right? Obviously, supply chain is going to settle out. Like
Yeah.
again, I'm the glass half full girl. This will start to settle out.
Well, see, my glass is full because even though construction costs are really high and it's taken a little more work to make a deal pencil for our developer clients, they're still building. We had our biggest year ever in 2021 in our history, double what we did, 4 years ago. So it's and then next year is an even bigger year. So my glass, forget half full, it's really full because we don't see a slowdown yet. And it's not only industrial, even though obviously that's the biggest work. I mean, that's always been part of our revenue, maybe in the 30% range, and this year it's probably in the 70% of our revenue for the year was industrial. But again, we're doing the marinas and the yacht clubs and the automotive and more city furniture. So it really is across the board. The only thing, we haven't started a new office yet. But that retail, I mean, you guys are talking about needing retail space. It's unbelievable. It's awesome. So it's, even though the
And
prices
you are looking for people, right? Project managers and such.
yes, we need, the cream of the crop. We have a special culture at Miller Construction Company. We've always had a work-life balance site. Our culture is just always do the right thing, even when people aren't looking. And if you're that person, we can teach you everything you need to know about construction, but you've got to have the right culture. So certainly project managers, superintendents, project administrators to some degree, and assistant and both of those, PM and super.
All right. Well, I so appreciate you doing this on your little holiday vacay. Congratulations on the new grandbaby.
Thank
And
you.
thanks for being here for Market Update Monday.
Anything for you, Beth. You know that.
Have a great time and Merry Christmas.
Bye. Bye, everyone.
All righty. We've been talking about this guy all night. Everyone keeps talking about you. Have you been hearing? Everyone's dropping your name. Everyone wants to know about industrial. So everyone, please meet my friend, Larry Genet, Executive Vice President, CBRE Advisory and Transaction Services. Welcome.
That sounds mighty fancy.
Well, you
Thank
are
you so much.
fancy and industrial.
Thank you for having me. I appreciate it. This is my first live event, even though I've been doing this for a couple of years. So thanks for breaking me in.
Of course. Well, then you have to invite me to your next live.
I've never done one, but I think you've inspired me.
Very good. Well, I love to inspire people. So, wow, $2.5 million an acre for industrial. Larry, I knew you're nowhere near as old as I am, but when you first started, did you ever think where the rents and the prices for industrial would be where they're at today?
Yeah, I mean, I don't think I spent much time thinking about it. I mean, I always knew that South Florida would continue to grow and evolve. Being born and raised down here and seeing it from a little kid, I used to ride on rollerblades on Lincoln Road and on the golf carts, carrying all the old people from shop to shop. And I remember when buildings in Wynwood were trading for $50,000. Like, it wasn't that long ago. So, seeing that as a kid, I always knew that we'd surpass the next level as the cycles went on, and we'll continue to do that. I think as long as the sun keeps shining and we have no state income tax, I think that'll keep happening. So I never tried to guess where prices were previously, but now, given that I have some experience and I've been around long enough, prices are now actually closer to $3 million an acre for quality land for industrial. So there have been some trades in the twos. There's going to be a trade in the 2.5 range, and there's already been a trade at $3 million an acre. And I think for quality and core locations, the best of the best, you're going to see that trading in the 3 million range moving forward an acre. Yeah.
Unbelievable. And so is it, I know what I know about industrial, I could put in my tiny, nail of my finger. So, but port, is the port industrial so much greater than non-port, or does that not matter?
Yeah, that's a good question. I think things have flipped. Broward actually used to be more expensive in some cases than Dade. But I think things have kind of flipped a little bit post-COVID, and now you're seeing pricing in Doral surpass pricing in Fort Lauderdale. So the two airport markets have kind of flipped, and we're asking $13 a foot triple net plus $3.50, $4 in operating expenses for Class B buildings in Doral. We're also asking it for some Class A buildings. So I think pricing in Doral now is between like 11 and 13 triple net, and pricing in Fort Lauderdale is pretty solidly between like 10 and 13 a foot, depending on the size of the bays and what have you. But yeah, pricing has jumped a lot, 20-30%, year over year.
Yeah, when I first started, warehouse industrial was $3 a square foot.
Incredible.
It's incredible. But,
Yeah.
then I look at my $60 retail rents and it was, 15 or 20. So I guess it's all relative, right?
Right.
Do we see in the future in South Florida what I've read in, on certain commercial real estate, newsletters or whatever, double decker, like vertical? Is that happening down here? I haven't seen any, or I haven't read anything. Oh, and one of our listeners just said, can industrial go vertical? So
yes, it can and it will. There are a couple of developers talking about doing it. There's nothing set in stone yet. I think you will see it, probably you'll see your first project get approved in the next, I would say, year or two. There's definitely going to be one coming, I believe. But as land gets more expensive and as rental rates push up, you'll see more and more of that. But we still have enough land to churn through, and we have enough places to build, 50 and 80 and 100,000 foot buildings before you see that as more regularly.
And again, when I first started decades ago, there was very few institutional. There was like one guy, right, who you still work for, one company. But are more institutions, I think, are now getting more into industrial, right? It's become more of an asset class of interest for in institutions versus the mom and pops. Like, are the mom and pops just getting blown away and like they're just getting kicked out, bought out, and properties are being assembled to do bigger properties? Is that happening? And that's what I'm thinking is happening, but I don't know.
Yeah, it's happening at scale. We're almost 100% institutionalized at this point. Now it's been so picked over that even the small bay stuff is going institutional, and you're seeing fewer and fewer private mom and pop owners be willing to stay in the game. I think as the first generation is now retired of those small bay owners, as the second generation is starting to come into a place where they're like, okay, I don't really need to work anymore. I can sell this project or this portfolio for, 40, 50, $100 million. Why am I still doing this? I think a lot of those second generation people are going to start selling over the next few years. And I don't see the third generation really stepping up because it's gotten kind of watered down. There's like a lot of kids and there's a lot of people involved, and it gets really complicated when there's more than one person in charge. So I think that trend will continue, and there's very few private owners of quality product now left in South Florida. I mean, they're out there, but they're getting bought out every day.
Wow. So one of our listeners says, I don't even know what this means, so hopefully you do. Please talk about flex space.
Sure. Yeah.
Do you know what she means by that? I don't know what she means by that. Okay,
sure.
go.
It's like 20 to call it 60 or 70% office built out space. It's less talked about. It's never in the news or never gets reported on, but it's just heavily built out warehouse space, essentially.
Oh, in the front, they have offices.
Correct.
So how much do we have of that in South Florida?
We have a lot. It used to get higher rental rates than the typical bulk distribution, but now actually the small bay industrial is outperforming the flex in terms of rental rate, which is fascinating because you would think something with heavy office would command a higher rate, but it's actually been inverted now where, small bay industrial rents are outperforming every other category. They're solidly in the $18 to $22 a foot range. And where you see flex like more $14 to $18 a foot.
So whenever I drive down 826 or 95, right, I just see industrial. Well, those buildings, they look to me like they're not in good shape. Will people buy those and then like do more assemblages and make them look better, or they just like use them to the ground? Like what happens with all, what I'm talking about? There's some that are not, that don't look like the stuff you lease.
Right. Well, I lease everything just for clarification, but
I mean, and you have the biggest signs in town.
And I will continue to have the biggest signs because as people copy me and make theirs bigger, I will go bigger, and it will never end until it's the size of the building. And that's
do not let them get bigger than yours.
Never. So,
and I'll keep taking my and when I'm out canvassing, I'll still take pictures of myself in front of your signs so you can see how much bigger they are compared to me.
I love it. Yeah, some of them are monsters. So the older, less functional buildings that are in rougher condition are worth so much money that it's going to be difficult to tear them down. I mean, I'm selling, I'm selling class B minus ish, C plus, maybe depending on who you are and how fancy you are. User buildings, single tenant, vacant buildings for users. I'm seeing those trade at 180 to 220 a foot. So at that pricing, you can't tear them down. So you're never going to have a low enough basis moving forward to justify tearing down buildings. Now, if you find, a metal building that's really messed up on a large piece of land, sure, that'll get torn down. We sell those all the time. But generally speaking, if it's concrete block or better, it ain't coming down.
What's the percentage in South Florida of concrete block industrial versus metal?
Metal's a small percentage. If I had to guess, maybe, I don't know, 15% of the market, 10% of the market.
How much to build a new warehouse of concrete block per square foot?
Oh, you should have asked your last guest that question.
I know.
I'm not the pro. I will say, her talk was super interesting, but one thing you guys didn't get to, the reason that people continue to build, even though the costs have skyrocketed just to proportions that nobody ever thought humanly possible, is because the rental rates are absorbing all those costs. So we're able to jack rents on the users, sorry guys, to compensate for the increased cost of the land and of the construction. So just think about how much rents have gone up to compensate for all that cost increase. So, but yeah, I mean, to build a building, if you're building at scale, 150,000 feet or greater for a shell, you're probably, I don't know, $100 a foot, something like that. But then you got to finish it, and the office is extremely expensive. So you're probably all into new buildings today with the pricing and everything, I don't know, $150, something like that. And all of these trades that are happening, all these institutional trades that are happening, they're all underwriting exits north of 200 a foot. So anything you see selling for like 150, 170, 180, they're all exiting at 230 and 240 and 250 and higher.
Oh my goodness.
Yeah.
Unbelievable. Any last words of wisdom? Do you do tenant rep or no?
Yeah, a lot.
You do. So tenant rep, listings, and you sell, right?
We do everything under the umbrella of industrial. We'll sell land, we'll sell buildings, we'll sell them leased, we'll sell them vacant, we'll sell them partially leased. And we do a lot of leasing and we do a lot of tenant rep. I structured my business to be multifaceted so that if one vertical ever took a dip for whatever reason, that the others would keep the revenue coming. And in retrospect, that was a really brilliant move because a lot of people aren't built out to have those different lines of revenue. They specialize in either tenant rep or they specialize in landlord rep, or they lease a lot of stuff, but they never sell buildings. I think the model that we've built is going to be the model of the future for brokers moving forward.
And being very active on social media. That
is paramount. If you're not doing that, you're not part of the conversation.
If you're not following Larry, you should be.
That's right.
Well, Larry, thank you so much for being my guest
you.
on Market Update Monday. I really appreciate it. I know you're busy, crazy, and I really thank you for being here on a Monday night. Now go be with those kiddos.
Yeah, I'm gonna go back to my computer, but I'll see them later. Bye.
Thank you, Larry.
Bye.
Bye-bye.
Thanks.
So that was it. Market Update Monday for South Florida. I hope you guys enjoyed it. If you did, comment on LinkedIn or Facebook or wherever you're watching this, and please share it. And if you would like to be on a future Market Update Monday in your market, let me know, and maybe you'll be one of my next guests. I'll talk to you guys later. Have a great Monday night, and I'm going to go hopefully watch the LA Rams kick the butts of their competitors tonight. So good night and Merry Christmas, Happy New Year, Happy Hanukkah, and all that jazz. Happy holidays.